The government next year for the midterm elections, in my opinion, is going to have to do things that are going to be viewed as printing money. I don't know what to see, whether it's tax rebates, whether it's getting involved in the housing market, whatever the case is, there's going to have to be more things that are pro-Bitcoin. It has to be. And the reason is...
What's going on, guys? Today we got a great episode with Jordi Visser. In this conversation, we break down why does everyone think that there's a bubble, and does Jordi agree? Is he bearish or bullish right now? On top of that, we get into the AI trade, why there is such a supply and demand imbalance in all the things around energy and infrastructure. Then we talk about the debasement trade, why institutions now are willing to allocate to Bitcoin and gold. We even get into some talk about capitalism, socialism, and humanoid robots. We go all through the topics that happened this week, and I'm excited for you guys to be here. Here's my latest conversation with Jordi Visser. All right, Jordi, we got a lot to get through this week, so we're going to go fast and furious. First up is bubble talk is dominating the market. Everyone is yelling bubble, 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 which makes me think maybe if everyone's looking for a bubble, we're not in one. But what do you think?
So everyone who's bearish is talking bubble, but everyone who's bullish is worried about a bubble. I've never seen anything kind of like this. Retail, different story. Like I don't talk to retail, so I don't think they're worried about this. But on the institutional side, it feels like a bubble. It looks like a bubble. I will say this. I was in Brazil in 97 and 98 and left in January of 99. And at that time, the .com bubble, quote unquote bubble, was going on. So I flew back, got a nice promotion at Morgan Stanley. I took over the largest option book at the firm, the S&P book. And so now I was talking to institutions in the US, but also seeing people in America. And it was very clear to me in terms of a bubble. There's been a lot of publications that have come out this week and articles that have been sent to me because I do my video and all I talk about is how don't fade AI. And so everyone now is concerned and they wanted my take on things. And I would say every single thing that gets sent my way is either clickbait or it's people that were bearish in April and May probably sold out of their AI trades and just have not had the opportunity to get back in because they were worried about the tariffs. And I think that's a dominant theme. And I think that's what people need to recognize. The .com bubble was a build out that occurred with sentiment at all-time highs. I've talked about the fact that UMISH is near the all-time lows in sentiment right now. At the time, it was at the highs. The Fed was raising rates. The Fed is cutting rates. The PMIs were up close to 60. They're now still below 50. And that's a survey, a diffusion index. If people are feeling it at the PMI level, it's probably trickling down to their individual portfolios. I had friends. I grew up in a blue collar town. My friends, when I came back, were buying houses. And I still remember one of them say, yeah, my AOL stocks allowed me to buy this house. I put it up as collateral. It's a different time period. And so this is not the bubble the way that people think, but I just want to remind people, we have a supply demand problem. And back then we had a supply demand problem too. We were building out massive infrastructure, but the App Store and the iPhone didn't happen for a long time after the build out. And those were the things that actually brought the revenues. In this case, we're building supply for demand we have now. We don't have enough supply for the demand we have in AI. And I still don't believe Oracle has not convinced people about this revenue story. I was thinking about it this week, saying to someone, you understand they have the revenues. They just don't have the supply to make them. If you walk into a restaurant and say, I'd like $300 billion of cheeseburgers, and you don't have $300 billion supply, there's nothing you can do to fill the orders. That becomes an RPO. You got to figure a way to build it out and do it. That's what this whole thing is about, is you're actually doubting the AI story, and the demand is way ahead of supply. Two podcasts I heard this week. One, Sam Altman was interviewed on A16Z, and he said clearly, the models that we have internally are much better than the models that you guys see. And the reason is they don't have the compute to give it out to 800 million users at this point. Listen to those stories and realize that if NVIDIA comes in and they're like, hey, take a look at what we have right now, they're going to make an investment if they see what it looks like right now. The same thing is kind of happening in the humanoid space as we speak. Other podcasts, Dylan Patel, the number one person to listen to. I can say this loud. I love people on the sell side. They can have their day in the sun. There's no way you can compete with Dylan Patel on what's happening in the AI supply chain. And very clearly on Patrick O'Shaughnessy's Invest Like the Best, he said, yeah, there could be a bubble here, but for there to be a bubble, the models have to be stalling, and they're not stalling. And so until we get to the point that we're not having inference demand, that we're not actually moving forward on all of the benchmarks, and we actually stop, forget the training models, the inference side at this point, there isn't a bubble. And so I think people are going to miss this. Doesn't mean we can't have corrections. Doesn't mean the AI stocks won't fall at some point. They all look parabolic at this point. I agree. But that's because we're in the inference stage and nobody was ready for it.
So basically what you're saying is when demand completely outstrips supply, you have a very healthy market and you're getting a pull into the market. It's when supply starts to outstrip demand, then that's when you get the glut. And that's when you get kind of the grounds or the ingredients for some sort of market crash.
Yeah, and they're talking now about the debt growing, and the debt's going to grow. And this is one of the reasons why, if you ask me 2030, I think there's a problem for all public companies. But in particular, at some point between now and then, the Mag 7 is going to have an issue because not all of them are going to be able to gather enough revenues to justify without competition coming from the other side. Do I think it's going to be horrible? No, but when your free cash flow is declining, and your debt is rising when these companies never needed debt before, that's a situation that could be an issue. But the telco situation, you have companies that had nothing to do with the end demand, building out the infrastructure, using debt for it. That's a disaster that tends to happen. Remember, in 2001, we had 9/11. People forget that like part of the bubble theme of 2000 to 2003 and part of the delay of when the iPhone and the smartphone and the cloud and everything that was necessary from that build out, we did have 9/11 in between, which put the economy into a recession. We ended up having some job losses, not a huge recession. In fact, if you go back and look, it's not even counted as one. But that was a completely different story. And I want to end it on one point. The NASDAQ, the NDX this year is up about 20 to 24%. In 1999, it was up 100%. In 1998, which was the year I was in Brazil when the world was falling apart, it was up 85%. It more than doubled in the prior 3 years. This is nothing like that. You can't even compare it. We're not even in the stratosphere of what happened in 99.
You wrote a great piece this week, Edison's lesson for the AI age, why the CapEx boom isn't a bubble. And you write in here, today we're witnessing a compressed 7-year sprint to spend $7 trillion on AI infrastructure. When you think about the size of the spend that is happening, another component I don't hear a lot of people talking about is a very large portion of that spend is coming from the cash flows of these large companies. So it's not like, hey, we're getting super over levered and we're basically trying to get anyone to give us money to go and do this. Now, there are areas where I think people are worried about the circular nature of some of the money. There's definitely some debt that's being taken on that historically wasn't taken on. But I think it's something like 60% of cash flow is being diverted to go and do this build out, which seems pretty healthy that the companies can actually go ahead and fund this stuff with equity.
And that's the whole point. I mean, you complain on the one side that the market's too concentrated of wealth. Well, now that wealth is investing the money back into things for everyone in the hope that they'll get their money back. They may not get their money back in the form that they need. It might mean their equity prices have to go lower. We're not at that stage yet, but that's really the point that people need to start going through is that if it wasn't for them taking all of the money in the prior decade from around the globe, meaning dominating market share, destroying retailers, they hurt jobs. They've created a K-shaped economy. In the end, they're investing that money back into an infrastructure which everyone gets to use. The democratization of intelligence allows entrepreneurs to rise. It allows them to do stuff. It's going to hurt public companies. If you work at a public company and you're not allowed to use AI every day that you're sitting in that seat, you're losing opportunity costs to learn a skill that can be learned in a very short amount of time. But every year that you're in that seat, you're falling further and further behind unless you're demanding to use not just one tool, not just Microsoft Copilot. You have to use all of them. And so those companies are actually investing back in here. And the point of writing the paper on the electricity side was to make sure people realize it was a long time from the light bulb, which triggered the build out of electricity grids in the US to when people, you know, in rural towns actually got the electricity. I mean, before the whole country was lit up, it was like an 80-year process. We're taking that entire time and shoving it into what effectively is going to be a 7-year build out from the time that ChatGPT happened to the power and the power and the compute that's necessary. Just remember, $7 trillion. Don't invest in the Mag 7 they're the spenders. But all of these semiconductors and all of these power names, especially the smaller ones, there's a reason why they're parabolic, because those dollars are massive, and they're the ones that have these people coming into the restaurant to buy their food. They just don't have the supply for it.
What I also don't see a lot of people talking about is like the size of the revenue jump compared to what the revenue used to be. Like there's the nominal number, right? Or the aggregate number. But then there's also just like the rate of growth of some of these firms and their revenue numbers is off the charts. I think that's why Oracle, is such an interesting situation. Let's talk about the impact of this AI kind of adoption. Bernie Sanders, of all people, not a big fan of capitalism, but he now has come out with this big report.
He's not a big fan of capitalism?
Shocker. And he has said that in this report, 100 million people are going to lose their jobs due to AI. Now, I always am wary of listening to someone who probably couldn't spell AI and doesn't really understand the technology, but let's assume that there's a staffer somewhere that works for Bernie who actually understands the technology and help put this report together. What is your take of a report like this coming out, the estimation of 100 million, but also the likelihood and timeline for something like that to actually come to fruition?
I mean, 100 million. We have 160 million people employed in
100 of them are going to lose their job. Didn't you read that report?
Exactly. I'm like, and maybe I'm missing something. I mean, we have 30 million people that are in the healthcare field. We don't have humanoids coming soon. So first of all, I mean, as much as I believe the job market is going to remain weak in the near term, that is because of a displacement that'll happen. For every one person who loses their job as a knowledge worker inside, a company that does knowledge work. Remember, there's more people that work in nail salons, that work in gas stations. You can go through the list. There's plenty of service-based jobs of which are not going to be replaced anytime soon. So, all of these reports are really meant for politics at this point. And I think it's another sign of the K-shaped economy. It's another sign that the government next year for the midterm elections, in my opinion, is going to have to do things that are going to be viewed as printing money. I don't know what to see, whether it's tax rebates, whether it's getting involved in the housing market, whatever the case is, there's going to have to be more things that are pro Bitcoin. It has to be. And the reason is, although I don't believe there's 100 million jobs, I think the point of that report, the one that was filed with The Economist to the Secretary of Labor saying they're worried about it, I absolutely believe that for the next couple years, people are underestimating the impact that the agentic worker side is going to have. Now, at the same time, Jensen Huang is saying we're going to need hundreds of thousands of electricians and plumbers. And, the Moonshots podcast this week, they talked about it as well. And they said, the average starting pay for this is $100,000 to $200,000. So these are real jobs. These are jobs now happening in the middle part of the country. You're going to see some of those. I don't think it's going to offset the knowledge worker side, but maybe we stay around zero job. It's really less about the firing, in my opinion, over the next year to 2 years. It's more about the displacement and the anxiety that is over people because they're going to watch as it continues to accelerate. The one thing about AI that never happens, it doesn't go backwards. It's this exponential compounding, and that's why it scares people, because the further you don't do anything, it's like watching a car drive down the street. It's like at some point it's out of your vision, and it's very hard to run and catch up to it. You have to get through. So I wouldn't take these reports as again, anything more than politics at this point, but I do think from a macro basis, it's going to have an impact on the K-shaped economy.
Are you telling me that the report, which is titled "The Big Tech Oligarchs' War Against Workers," is related to politics? Okay, that's. I'm glad you broke that down for me. You mentioned rebates, things that are positive for Bitcoin. One of the news stories that I've seen is taking tariff revenue and essentially doing like Trump bucks again and, handing out the $1,200 sounds ridiculously bad idea to me. I don't know if it's actually a policy that they're considering or not, but that feels like the most egregious and obvious. Like if we want to give money to people, let's just literally hand them a check. Do you see that in the next 2 or 3 years happening? That's not a no. That wasn't a no.
No, I'm just trying to think whether I think it's more likely in the next 9 months. Again, I think there's going to be cash handouts to people. I think we're at some point, and again, I want to say this because I do believe the market, I heard you speak this week, and for everyone who's trading and getting involved, there's a big difference between Micron being at $60 and being at $200. At some point, you've built in at least a lot of the good news for the near term. I do think the market as a whole, sentiment wise, because of all the things that are fairly obvious, Fed's cutting rates, markets making new all-time highs, earnings are growing, that maybe people should be ready for something that occurs. I mean, I can't remember the last time, and I'm normally pretty good with bringing out stats, but I'm going to say something that I just know. September was an up month. For September, October, November, December to not have a correction of, say, 4% is almost impossible in my mind, meaning I don't know how many times in history during those 4 months, because usually either September or October, there's a correction. Sometimes it can go in November, seldom in December, but also possibly there. I think we're going to get a wake-up call for people. So when you hear stories like this, I think it's a mini sign of COVID. Like, if we're going to keep throwing money, and I think they have to, because the bottom end of the economy is not seeing anything good happen. I mean, I don't know what else to say to people. If the job situation is not good, if sentiment is low, and if we're seeing things blowing up in kind of auto loans, if we're seeing things in student loan delinquencies, you still have the bottom half of the economy that's suffering. And I think there's going to be something that happens in the short term. So a warning sign to everyone trading stocks: be prepared for some kind of a correction between now and the end of the year. Do not worry on the AI stuff. If stuff falls, there was a negative article on Oracle this week. It fell down to about 270. When we came back in here today, it was back above 300. When these things occur, they're actually opportunities.
It's like a reset.
Yeah, I'd be trading more actively and being aware of things as opposed to just riding things right now.
So one of the things that I said, which I think you're referencing, is today's episode is brought to you by Figure. They're the largest non-bank mortgage lender in the United States, with over $15 billion unlocked on their lending platform. They've just lowered rates on their Bitcoin and Ethereum-backed loans to 8.91%, improving their already industry-low fixed-rate 50% LTV loans. They keep building as well, being the only major CBL player to launch decentralized MPC custody to protect against single entry failure. And they just removed interest deferral fees entirely, so you can let Bitcoin price appreciation pay for your loan over time. What is MPC decentralized custody? It's a Bitcoin or ETH on-chain wallet with multiple key shards to protect you from single entity custody failure. You can always see your crypto ownership in a segregated wallet and verify your collateral hasn't moved. Whether you're funding a major purchase like a down payment on a home, investing in new opportunities, or even buying more Bitcoin, Figure makes it straightforward and transparent. Visit their app or click my link below to take out a Bitcoin-backed loan with Figure today. Back in April, everyone was max bearish. Everyone thought the world was going to end. I think you, I, and very few other people were very bullish, saying, hey, look, you should not be worried right now. You should be very enthusiastic and excited, and you should be aggressive. I think that now that everyone is very enthusiastic and kind of max bullish, my message was not so much like you should be bearish now, because I actually don't think that's the right position. But I described it as emotional control. Just avoid the exuberance, avoid the euphoria, and just keep a level head. And I think your point about could there be a correction? Could there be this stuff? Yes, but it's almost like this reset. You kind of clean out some of the euphoria. You remind people hey, it doesn't go up in a straight line forever, but the underlying fundamentals are pretty strong. And so it's actually an opportunity in many of these names to add to, rather than say, hey, it's over and I got to go sell and move on.
Yeah. The analogy I gave to my son who's trading more and more and was trading as a young kid, when he needed an analogy of when I say, okay, I think you have to be trading more rather than riding things at this point. You can ride things when sentiment's been extremely negative. And once you get that move up like you had in April, then any dip to me is a buy. At this stage, and the way I said it, and this might be more of a Northeast thing during the during the early springtime, but when he's driving around and when he could drive, I'm like, all right, at nighttime, be very aware of deer. Drive more cautiously. Don't take your eyes off the road for even a second, because they just kind of go out. During the day, they're not as likely to do that. You're more easy to see. That's the way the trading mentality for me. I used to do that in Brazil. It was like, okay, I'm expecting vol to go higher, which means there's more opportunities, but there are also more chance to get stopped out of stuff. And I want to be in a position to add to things and trade them back and forth. So I think it's one of those times. Watch for the deer.
All right. There's a story that I understand 1 inch of, right? I need to go deeper. We need to drill for some oil here. In the credit world, there is this bankruptcy from First Brands. There's a couple of other stories. I think that there are increasingly over the last 48 to 72 hours, more and more people are saying, wait a second, what is that over there? And there's some people who are like, that's the canary in the coal mine. There's other people who are saying that doesn't mean anything. Explain what happened here. And then what is your kind of read into what I think a lot of people are saying may be, worth paying attention to?
So there's been two credit events over the last 2 months. It's really been over the last 40 days. Tricolor, which is an auto lender for cars, again, subprime. And then First Brands, which is a parts supplier. Both of them involved in the car market. And both of them they're being investigated now by the feds for fraud. So you've had two events. They've both led to bankruptcies. In the case of First Brands, which is a very large one, it has brought in Jeffries into it, who was involved in it. I think their stock is down 20 to 25%. So when you have a bank that falls that much, you're starting to get some people looking around. The problem is a lot of this stuff is off balance sheet. It has a lot of Enron type kind of components to it. There's apparently about $2 billion of cash missing. So think about what FTX did to the crypto market.
Did you see the email?
Yes, I did.
That email is amazing. So for those that didn't see this email, there's a lawyer emails another lawyer and basically says, can you please tell us what the company did with the $1.9 billion? And then in parentheses, they say, regardless of what the answer is. And then they say, can you please tell us how much money is in, some bank account? And the recipient lawyer responds with, number one, we don't know. Number two, $0. And I saw a screenshot. Somebody said, not the answers you want to get from these questions.
So here's what's happened. This has gone into the private credit world. And so private credit world has been viewed as a bubble for at least the last 5 or 6 years. Now, I don't think this is going to turn into something, catastrophic, but it does highlight the risks inherent in an economy that has commercial real estate market that's horrible, housing market that's horrible. Those are two areas with lending. And even though the housing market has tons of equity, the commercial real estate market's not great. The auto market's not great. You've got people defaulting on student loans. You don't have a great economy for the bottom 50%. And this is directly related to subprime. So I think people should pay attention to private equity stocks are selling off relative to the market, all of them. So I think there's about 6 or 7 listed private equity companies. They're falling. BDCs are falling as well. So funds, income funds, they're all kind of getting hit here if they owned any First Brands. And so you're getting this little thing where, okay, it's not a big deal, but then you look for the contagion. Junk spreads have widened out like, I want to say 15 of the last 18 days. Again, nothing catastrophic, nothing that says this is a major problem. But when you're in a market that is, let's say, hasn't had a correction in a while, and I think we're going since August 1st without a 1% correction in the S&P.
Crazy.
It's a long time. So that's an issue where it's kind of like if it hasn't rained for 30 days, you light a match, everything can go up. So it doesn't.
Can we go 100 straight? Can we get a 100-day streak of not down 1%?
Can we? Of course we can. I don't think we will, but of course we can. But there's one other thing going on that I just want to, make known to people. So I'm a derivative person by training. I spend a lot of time on correlations and a lot of time on factors. The hedge fund that I was at, we did market neutral. So I followed factors a lot. The factor world has been, let's say, showing signs of stress as well. And what I mean by that is the most shorted stuff is going straight up. And the things that have good fundamentals, quality stuff, has been underperforming. Now, this has been going on since June, but it took another leg at the exact same time as Tricolor ended up being an event. And this is the way contagion goes. You need leverage. There's a lot of hedge funds, especially quant strategies, that could have been in that trade. And then on the other side, another part of their book may have been a long short equity quant strategy. We're seeing signs, and it's been about, I want to say, almost the exact same amount of time, but in particular about the last 10 days where it's been fairly violent and fairly consistent. I can do an overlay chart, which I'm going to show in my video, which shows these types of positions, like the shorted names versus the S&P. It's a big move higher. Now, the last time this happened was in 2020. We had a similar type event, and that led into GameStop. I think you have a situation here where the market structure is kind of shaking a little bit. And I would expect that unless it starts to change, you're going to start to see more volatility in the space. So the second that we have a 1% correction in the S&P, I think that's going to be the trigger point of more liquidations for a week or two.
And how big of an issue or how much concern should people have if the streak breaks, there is this kind of liquidations? Like, is it a healthy correction, or is it there's cracks in the armor, don't get the bucket of water, like run because the dam may break?
The best way I can say it is for people who are married, if you haven't had a fight with your husband or your wife in a month, every now and then a little fight. Yeah, it might be fine for cleansing to just make sure the passion is still there. Everything is still good. A good kind of debate on something every now and then is healthy. And I think the market needs one of those too. So.
It's like I had a coach at high school football. He used to always say, if I'm not yelling at you, be worried, because that means I don't care anymore.
Complacency sets in when there's not volatility. And so I don't think everyone should treat when we do get a 1% correction. What I would be doing is have your list together of the names that you really like that have just started to move out, the battery names, stuff like that. If you can get a big correction, Bitcoin miners, things that like people are focused on, maybe they've had a big run, they look kind of parabolic. You look over the 5 years, like, I think this is just starting. Those are the ones I'd be focused on in terms of, okay, if we get a correction, let me have my list together. It'll be a mini version of Liberation Day, but I do think we're getting close to one of those.
Okay. The debasement trade is all the rage.
Yes.
AKA just buy Bitcoin and gold. Gold has done very well. Mm-hmm. Silver also doing well. Bitcoin, I think has done well, but people are a little disappointed. We'll see if it catches up. Why is it now that Wall Street is finally saying, we believe the debasement trade? Right. This is something that people have been talking about on the internet. I mean, Gold Bug's been saying this for 30 years, right? The Bitcoiners have been yelling and screaming about this on the internet for a decade. Is it something about COVID? Is it something about like the China central bank now says, hey, we're going to make a multipolar world? Like what is the thing that is now it is okay for everyone to go and put the trade on?
Honestly, if and this is just my take on something unique that has happened. And I think Charlie Bolello put this out this week. Yeah. And again, he's on my X list and I'll look, but for the first time, and obviously in Bitcoin's history, the number one and number two assets are gold and Bitcoin year to date. The reason that's a problem is as much as, it seems like people would own gold, the majority of people do not own gold. The majority of people do not own Bitcoin. I think with the changes we're seeing, like Morgan Stanley has their global investment committee has approved crypto. And I think they said an allocation of 2 to 4% makes sense. They did put a disclaimer I love, which is, but we'll be very aggressive with rebalancing, meaning if Bitcoin goes up a lot, we're going to sell out of that and rotate back into the others. I think the problem is bonds have been a horrible investment relative to inflation. Stocks have been good, but it's been more about global stocks this year where people are not as overweight as they are in U.S. stocks. And U.S. stocks have been okay this year. But again, I think when we talked last week, at the peak this week, I think Bitcoin was up 33% when it got to 125 year to date. Well, at 33%, the S&P was up 15%. So you're still doing 2 times this year. So I think this is a way for the banks to kind of edge into. I think you need to have the debasement part of your portfolio, which would be gold and Bitcoin. And I think this is a way to get the FAs to have the conversation. That would be my guess, because it's funny. And I posted something about this week. For every person saying that AI is a bubble or that the stock market is a bubble, they're also positive on gold and they don't say that's a bubble. Mm-hmm. So it's like, okay, the miners are up over 100%, but that's not a bubble. So the irony of all of this stuff is for people who are bearish, they've accepted gold. I think for people sitting at home that are retirees and people that are doing asset allocation, I think the debasement part of the portfolio, which, to give him credit, I mean, Darius Dale's talked about this forever. He's had gold and Bitcoin as a big part to replace bonds. You need to have some of that. So I think this is the bank's way of kind of catching up to Darius.
Today's episode is brought to you by Simple Mining. Have you ever been interested in mining Bitcoin? As a miner myself, I've been using Simple Mining for the past few months, and the experience has been nothing short of seamless. I mine with the pool of my choice, and the Bitcoin is sent directly to my wallet. Simple Mining, which is based in Cedar Falls, Iowa, offers a premium white glove service designed for everyone, from individual enthusiasts to large-scale miners. They've been in business for 4 years and currently operate more than 20,000 Bitcoin miners, including mine. Their electricity is over 65% renewable thanks to the abundance of wind energy. Not only do they simplify mining with their top-notch hosting and on-site repair services, but they also help you benefit financially by running your operations as a business. This approach offers 100% bonus depreciation to optimize the profitability of your investment. Do you ever worry about the completion of maintaining your mining equipment? They've got you covered there too. For the first 12 months, all repairs are included at no extra cost. If you experience any downtime, they'll credit you for it as well. And if your miners aren't profitable at the amount, simply pause them with no penalties. When you're ready to upgrade or adjust your setup, their exclusive marketplace provides a seamless way to resell your equipment. Join me and many satisfied miners who have simplified their Bitcoin mining journey. You can even get started today with the 7-day miner trial. Visit simplemining.io/pomp to get started today. That's simplemining.io/pomp to get started today. With Simple Mining, they make it simple.
Hi, I'm Matt Hogan, CIO of crypto asset manager Bitwise. Look, crypto can be confusing. There's so much noise and the space changes so quickly. That's why, every week, I write a 5-minute memo on the biggest stories impacting crypto, in plain English. Why is Bitcoin up or down? What are people missing? Where should investors look next? Get the lowdown every week. Sign up to get the weekly CIO memo delivered straight to your inbox. Go to bitwiseinvestments.com/CIO memo. That's bitwiseinvestments.com/CIO memo.
Carefully consider the extreme risks associated with crypto before investing.
I have an anecdote for you that you'll love. I recently had a meeting with a bunch of reporters that all work at the same major financial media outlet. And it was a little bit of they could ask me questions and I could kind of help them better understand how to think about some of this. And in the room were people who cover the markets, people who cover the major banks, people who cover the hedge funds. I mean, it was a pretty wide group of people. Mm-hmm. And in this meeting, one, they couldn't have been nicer. I mean, they were genuinely interested in learning. But the questions, I was surprised at the perspective that they had on this. And there was a point in the meeting where I started talking about the fact that investors should be reporting their returns in dollars, in gold, and in Bitcoin. And all of a sudden, a lot of LPs will take back their money and be like, wait a minute, like these are not real returns against assets that can't be debased. Yeah. You would have thought that I was speaking like not even a foreign language, like a language from an alien colonization that people have literally never heard before. They were looking at me like, what are you talking about? And after I left, I started thinking more about it. And I said to myself, in a world where non-productive assets are outperforming productive assets, that actually violates the core of what investors have been taught their entire lives.
Yep.
And so to me, that is like the paradigm shift. And the question it begs is, okay, people say 60% equities, 20% bonds, 20% gold, I think is what Morgan Stanley came out with. I think you or I would say, well, maybe the bonds don't really need a part there, right? Whatever. But actually, like, is it time for us to say, wait a second here, like the majority of the portfolio should actually be in the non-productive assets. And it's these, AI or other kind of momentum-based technology, innovation stories that should make out the, kind of fill out the portfolio. But the core in this world of fiat, kind of printing, like that's actually what should be being told to the financial advisors or whoever.
So I know we've talked about this, but I'll always go back to this and say to people, whatever you know about Michael Saylor is wrong. It's just wrong in terms of the company, the whole thing. I consider myself someone who likes to learn from other people and podcasts and reading and all types of stuff. When I got where this point went, where I think it's really important, is during COVID. The fact that everyone didn't take the time that they had on their hands and really focus on what was happening with crypto, why it was going higher, and start to ask the question, am I missing something important here? The biggest change that's happened, in my opinion, breaking from historical correlations, is that the stock market is called a bubble, but sentiment is near all-time lows. Like that should be making people go, what's going on here? And for me, if I didn't spend time listening to Michael Saylor talk about what the government was doing to our future in March of 2020, in April in 2020, in May of 2020, and the following year by printing all of that money, the reason we have a K-shaped economy is because we printed money to make assets continue to go higher. We gave people money, which they spent in jobs that should have been, could have been saved and everything, but people were YOLOing it and all this stuff. And so now when the whole tide goes back out, AI is taken off. AI is just the end result of what was happening from the dot-com bubble build-out. The dot-com bubble build-out allowed for the smartphones. It allowed for the cloud. It allowed for all of this disruption of jobs. Michael Saylor talks about that. Jeff Booth talks about it. It's something that as a macro person, I needed to hear, which is when you print money and you allow innovation to go at this fast pace and Moore's law kicks in, it's meant to eventually displace jobs. And so Bitcoin relative to housing, if you took all of the money that you got from the government and you put it into Bitcoin, I don't think people would want to know what it's worth because Bitcoin was down below 10,000 and now it's at 125. So if you put that money in Bitcoin at that point, it would have gone up significantly, much more than the housing went up, much more than your food prices went up, much more than all this stuff. So I think the problem is you get a massive surge in inflation. So your costs are reset higher. You get all this money for your job. And guess what? You spend it all. You're playing catch up from that point on. And I don't think that people fully grasp that that event had a huge impact on the way that this debasement trade is going. I think people are finally starting to understand the majority of the country, which is why we're going to have an election in New York City. And now he's up to 89%. Young people can't afford to live in the city that they want to live. And their parents are worried because they're having to help them with being able to live and come out of school where now they're not getting hired out of jobs. It's a very, very combustible situation for the young people. So debasement to me all starts back there. And what Bitcoin and gold are part of is the fact that if you're just going to keep printing, I need something that isn't paper. I need something that actually can keep up with the assets that you're forcing higher to keep us when we have a time of debt. It's all linked together, but to me, it really comes back to COVID and this whole sentiment thing for younger people.
I haven't said this publicly, but I'm going to go on record. I could be wrong. I'm going to be a weasel. I'm going to be weasel, and I'm going to give myself an out. But based on the facts I know today, and I reserve the right to change my mind, based on the facts today, Andrew Cuomo is going to be the mayor of New York City. Mamdani's not going to win.
Wow. So, okay, you've got some good money to make off that. I mean, if we're 90% in poly market right now.
Yeah, maybe I should. I've never, I'm kind of an all or nothing guy, so I've stayed away from actually investing in the prediction markets. But I might go set up an account and see what happens there.
That's like buying Open Door at 1 and watching it go to 10. I mean, you're getting a payoff that's big.
Yeah, so. The thing, the reason is momentum in the polls, and I think that actually. That feeling of like helpful or helplessness that was the initial surge, the stock market and everything going higher. There are more people who are benefiting in this city in particular from all of that, where that felt really bad in April and May. Like, hey, actually, this isn't working. I think there's a lot of people say, actually, the system, it's I got a couple more shekels in my brokerage account than I thought I did before, right? And so, in a weird way, the stock market is helping Cuomo over Mamdani, and it's like this release valve of a lot of that helplessness. Where I do think that he would have won in the summertime before we got the kind of bubble blow off top excitement, bull market, whatever you want to call it now.
I think what you need to do is on this Saturday. Go take a cruise to Williamsburg, where I live, where the hipsters are. Walk around. You might feel a little differently. There might be a few more people in that town in the younger part of the city that are 100% on the opposite side. So you might be feeling a change in Manhattan with the people you're dealing with. But you're actually, you're getting on the older side now. Now you got to kind of come back to Williamsburg and join the younger crowd.
All right, I'll do my trip around Manhattan. Let's talk about humanoid robots. There's tons of. I mean, this is like Fast and Furious news at this point. I think you mentioned something earlier that I've noticed. There's 4 or 5 guys that I know that are very much in this trade. Chris Camello, Andrew Kang, right? A couple of these guys. They all keep hinting at. I've seen the future and it's not yet public. and I'm trying to put more money in. That's usually a pretty good sign something's happening behind closed doors that is exciting or innovative. What's your read on the humanoid space right now?
I mean, I wrote a piece on Tesla back in the summer because I think you and I, because like X is our dominant way of gathering news and information, the brain is really good about connecting dots as information just kind of overflows, this crowdsourcing part. Our brains are good for that. Like if you're good as an investor, you're like, this is not the first time I've heard this. And the way you described it is what I felt with Tesla. I'm like, I can't name all the things to you guys about all the tweets and all the podcasts, but like, I get the impression that we're much closer to this humanoid thing, whether it's robotaxis, which are, again, humanoids on wheels, or where we're making a big advancement here. So I've noticed the same thing. First of all, I listened to Chris Camillo's Dumb Money podcast. And yeah, I got to be honest with you, he was fairly negative on Optimus. Even at your event, he wasn't negative, but he just didn't think they were as close as people did. He was the one that, kind of was the nail in the coffin for me as to, I think there's something people have to pay attention to. So what he highlighted was, number one, the shareholder meeting is coming up for Tesla on November 6th, I believe. And on the cover of the invite is an Optimus. He had this huge pay package that was set up, which again, to me, if that's the way it's going to be and they're doing this, they must believe it's coming soon. I've talked about Gavin Baker and Brad Gerstner and Jensen Huang of all the, over a 4-month period said, yeah, this is going to be the biggest industry that the world has ever seen. So what Chris said was, I don't know if the November 6th, he's going to wheel out Optimus 3 or not, because no one has seen Optimus 3. Optimus 2, there's a Kung Fu video. Crazy on there. But there's 2 Kung Fu ones. One is inside the Tesla thing that reportedly was filmed by Musk. But then at the Tron event, there was another one. And that one, no one knows for sure, but it looks like 2.5. So the question Chris said is, if he shows 3, that's a big deal. Now, yesterday, Figure AI showed Figure 03, which to me would be like we're seeing with the AI models, which is, let me get in front before they do something so that everyone saw and I don't know if you saw the video with Figure 3, incredibly impressive.
Every video I see now, I'm like, this is so obvious where the world is going. I wasn't saying that a year ago, but now we have hit the point where like every single video, I send it to 10 friends. I'm like, look at what they made a machine do. Yeah.
And that one in particular, the whole thing with grabbing the egg and doing this. Now, yes, they can be orchestrated. That's why if Elon Musk is willing to show it, not on a video, but at an event, if he does show Optimus 3 and the advances that he made, then all of a sudden you have to take that entire multi-trillion-dollar valuation, you have to start to move it up for the entire humanoid space. And I just want to remind people, when Steve Jobs demoed the iPhone, arguably this is far more important. And that's what Chris was saying. He's like, this is an asymmetric event now. Mm-hmm. If he does show Optimus 3, I want to be invested in Tesla for the event. If it comes out and it's another, thing where Elon is showing 2.5 and we leave disappointed, the stock will fall $30 immediately. But he doesn't want to miss the chance that this thing could be an asymmetric event. So I just think people should pay attention to 2 things. Number one, fading AI is like fading the compounding side. You can't have humanoids without the AI movement that we've had. Every day that the AI movement continues to move forward means humanoids are coming closer and closer to that event. And you want to know what the TAM is on that. Mm-hmm. Immediately. And I think that's the big event. And so Figure doing this, them doing this, and so everyone remembers, Chris is involved with Apptronic. He knows this space as well, if not better than anyone. So the fact that he's talking about it, I think everyone should go listen to his Dumb Money podcast. And
what a great podcast name.
Yep.
Dumb Money.
It's great.
Right. All right. My last question for you is, a couple of weeks, maybe months ago, you were very, very bullish. I feel like right now, in talking to you for the last hour, maybe you're more prudently optimistic, cautiously optimistic. Is that a fair way to categorize how you're feeling right now?
For anyone who doesn't care what happens for the next month or two and is only looking about the next 6 to 12 months, nothing has changed for me.
You're like max bullish.
Yeah, I think for the things that I care about, which are all compute and power, compute and power, compute and power, compute and power.
Okay.
We are still in the early stages. For anything related to edge devices, NPUs, all the things that we've talked about over here, we're in the very early stages. This applied digital, APLD, if you go look at the chart, we just took out 4 years ago's prices. That's the PMI trade. Again, we're entering a period where the physical hardware of the world is necessary. If I showed you an aluminum price today, it's breaking out. I want to focus on the things that are there. One more thing we haven't talked about, which I want to make sure we do before it ends. China put export curbs on rare earth and battery materials this week. Now, this is a few weeks ahead of the scheduled meeting with Trump at the APEC summit. I still expect there to be a grand bargain out of this, but I do believe this tit for tat is China continually showing that it wants leverage. So the fact that they've said they want to change the language on Taiwan, there's a whole bunch of things the Chinese seem to be asking for that the news is putting out there. And I think when you add them all up, again, crowdsourcing, I think China is negotiating and trying to get certain things. The farmers in the country are suffering in a very, very big way. The Chinese have not bought any soybeans. If you type in farmers, United States, you will see it is, I mean, there's bankruptcies happening. So I do think this China-US thing, if I'm wrong, this is another event that would be viewed as a negative. I don't think the market would gap higher on a Chinese grand bargain, but I do think on that event, it would be a positive. Now that would be a week before Elon Musk, and it would be before your big call on Andrew Cuomo. So
yeah, I just think it's all, there's a pendulum in this country. And I think that there was this massive shift towards, Trump got back in office, all like the TDS stuff, the terror. I mean, it was like he was shooting at the ground dancing, right?
Yep.
As he was doing all this stuff. And so you got this like huge pendulum swing. The world didn't end. And so I think naturally the pendulum kind of starts to swing back towards like, okay, maybe there's like positives. You see these AI deals being announced, one after the other, et cetera. I think a lot of the like anger towards Doge and these things now has like migrated now towards ICE, right? And so it's just like, it's the same thing. It's just moving to like wherever the puck is. But what happens is ICE is pretty far away from economic policy and markets. Doge was like directly related, right? This whole idea of like, we're going to cut government spending, we're going to like do this stuff. And so as you get a lot of that further away from the market, you do start to see this kind of swing. And I'll come out to Williamsburg and we can walk around and see look, I love the people in Williamsburg, but
they love you.
I think that a lot of those folks are in a better spot today than they were in April or in May. They may not want to admit it, but the stock market going up, I do think impacts a lot of people in a positive way. And so when you start to think through this, it just feels like there's a slight little bit of optimism. And one of the aspects that I don't know how to really read into, but I think it provides some clarity, is things like the Middle East peace deal. And so it's like you're getting more clarity in the market. You get a little bit more optimism back. You start to say to yourself, okay, things aren't going to be as bad as we thought they were 6 months ago. Now, doesn't mean there can't be corrections, all the things we talked about today. I do think that Mamdani in particular was a radical change to a situation where there felt like there was no hope. You have to switch so hard. If all of a sudden there's a glimmer of hope at the end of the tunnel, the radical change may not be as attractive. We're going to find out. I could be completely wrong on this, right? But like, I just feel like there's been a little bit of a vibe shift where now it says, wait a second, I don't know if people are as hardcore. I mean, his base, sure. But like the person on the edge, Adams drops out. If Silwood drops out, you get a 2-person race. I don't know. I think it's jump ball.
So I hope you're right. I do. I
thought you were out there knocking on doors from Mamdani.
No, I'm following Polymark and going through it. I actually, so this is, I mean, the reason I believe in Bitcoin is because I do believe socialism will be kind of coming through the country. Bitcoin represents to me a form of anti-establishment, of just hating everything. And I think socialism, for all of its thing, it's still a fringe thing. And I think for young people who don't necessarily either understand or are feeling intense pressure from AI and from student loans, I've studied Joseph Schumpeter. Part of the end game for capitalism in his mind was eventually cannibalizes itself. And to cannibalize yourself, that's kind of socialism. So I'm kind of thinking in the back of my mind that the young people are just feeling like they need to try something. And like I said about the market, every now and then you need to try something doesn't work, and then you come back to something. So in the long run, I don't think handing stuff out for free and doing those things. We're both capitalists. We both believe in it. We believe the country was built on it. And I think as a country as a whole, there's a very big different story between a fringe thing in New York City, because I do think young people are feeling more pressure than people that are wealthier and own assets.
I'll leave you with this, which is I saw somebody tweet. They said, okay, so let me get this straight. You want to take the MTA, which is broke, and you want to make the buses free. So we're going to take money away from the people who are already broke. That sounds like a great way to run the program. That's it for this week, guys. We'll see you guys next week.